Here's something that might surprise you. The average entrepreneur invests up to 90% of their personal savings into their business, while the typical billionaire invests less than 10% of their liquid wealth into theirs. And yet, guess who ends up owning everything? The billionaire. Not because they had more money, but because they used a completely different strategy to fund their empire. One you rarely hear about unless you're already sitting at the table. Today, we're pulling back the curtain on a powerful but quiet game being played behind the scenes. We're not just talking about bank loans or venture capital here. We're diving into the hidden strategy billionaires use to fund their empires that nobody talks about. The way they think, move, and position themselves to scale without selling their soul or their equity. If you're someone building something or dreaming about it, this video could literally change your financial DNA. Before we get started, if you're serious about building long-term wealth and want access to mindset shifts most people never learn, go ahead and subscribe now. This channel is built for you, and this might just be the most important episode yet. Let's kick things off with a reality check. The average person who wants to start a business begins with the worst kind of capital, their own. They drain savings, rack up credit cards, or beg for scraps from angel investors. It's like building a skyscraper on wet cement. Every gust of wind feels like it could wipe them out. And the stress? It's not the "I'm building something exciting" kind, it's the "if this fails, I'm screwed" kind. Sound familiar? Now contrast that with how billionaires operate. They don't throw every dollar into the fire. They position their ventures to fund themselves or attract money without begging for it. It's not about arrogance, it's about strategy. They don't chase money. They build something money wants to be a part of. And it all starts with a different relationship to risk. For most people, funding a business feels like jumping out of a plane and hoping you build the parachute on the way down. For billionaires, they build the runway before they even take off. Most people are taught to chase capital. If I just had more funding, I could finally grow, they say. But billionaires know the real power lies in control. Because once you give up control, especially early, you've handed the keys to someone else's agenda. And, more often than not, that agenda isn't your vision. Let's take a cue from one of the oldest and most influential financial dynasties, the Rothschilds. They didn't build their fortune by raising money. They built it by controlling the flow of money, by creating systems, banking networks, that gave them leverage without exposure. They understood what many still miss today. It's not about owning everything. It's about controlling how the machine works. There's a reason the quote, "Own nothing, control everything," is still whispered in elite circles. Is it a little Machiavellian? Absolutely. But it's also how the game is actually played. If you're trying to fund a dream, don't just ask, "Where do I get money?" Ask, "How do I structure this so I never have to give away control just to survive?" Now, let's talk about something people love to misunderstand: debt. For most, it's the monster under the bed. For billionaires, it's a tool, sometimes even a lever to scale without giving up a single share of ownership. The difference? Strategy. Look at Elon Musk. He's a walking case study in financial leverage. He didn't just build PayPal, cash out, and retire. He used those proceeds to fuel SpaceX. Then, while SpaceX gained traction, he used its rising value to secure debt and equity to fund Tesla. Not by spending his own cash, but by orchestrating a flywheel of value creation and funding momentum. Then, while SpaceX gained traction, he used its rising value to secure debt and equity to fund Tesla, not by spending his own cash, but by orchestrating a flywheel of value creation and funding momentum. At one point, he borrowed billions against Tesla stock, without selling a single share. Imagine being so dialed in that banks pay you to keep owning what you already own. Meanwhile, the average small business owner won't take a $10K business loan but will happily lease a car they can't afford. That's the psychological trap most never escape. Fearing bad debt, but living with it every day, while ignoring the kind of debt that builds dynasties. By the way, if you're enjoying the video so far and want more topics like this, comment the word "more" so I know. All right, now this is the part they never teach in business school. The wealthy don't just raise capital. They design environments where capital wants to live. They build ecosystems of trust, access, and value, then let those systems attract money on their behalf. It's not magic. It's math, psychology, and patience. The real hidden strategy is this. Billionaires use asset-backed thinking and equity preservation as their foundation. They don't give away 40% of their company on day one for a quick injection of cash. They think in terms of staging capital, delaying dilution, and protecting upside. Want a quiet example? Most billionaires don't publicly fundraise until the company already has traction. Why? Because leverage flips in their favor. They wait until money needs them more than they need money. That's the secret. The power shift. You're not chasing capital, you're choosing it. That's the hidden strategy billionaires use to fund their empires that nobody talks about. It's not flashy, but it's unstoppable. Moving forward to the next idea, and it's a big one. Billionaires don't think in cash. They think in assets, real estate, code, brands, relationships, licensing, equity stakes. These aren't just nice to have, they're currency. Currency that can be collateralized, borrowed against, or converted into capital when needed. Let's say you own a high-performing rental property worth $1 million. That's not just an income stream, that's a funding tool. You can use it to secure a line of credit, bridge cash flow, or back another asset. Billionaires stack these kinds of tools, not to flex, but to fund the next layer of their empire. One investor put it best, "My cash is broke, but my assets are working overtime." That's not a motivational quote. That's balance sheet reality, and it's why your first move as a builder shouldn't be to raise capital. It should be to build something that counts as capital. Now let's revisit the Rothschilds, not for the conspiracy theories, but for the cold, boring brilliance of their system. They didn't chase capital. They built infrastructure that made them indispensable. They funded governments, owned bonds, and established trust networks so strong that nations turned to them in crisis. This is what the hidden strategy billionaires use to fund their empires, that nobody talks about, looks like in its purest form. Funding through influence, not noise. You won't see them pitching at startup expos or posting flashy funding wins on LinkedIn. Their capital flows quietly through relationships and mechanisms built over decades. Today, we see echoes of that model in how billionaires structure their family offices. These private firms don't just manage wealth. They allocate capital into ventures, often with better terms than the open market would ever offer. They allocate capital into ventures, often with better terms than the open market would ever offer. It's the difference between needing the system and becoming part of the system. And if that sounds elitist, well, maybe it is. But it's also the playbook. And it's more accessible than you think if you if you start building your own systems early. Now let's shift gears into the psychology behind all this. Because at the core, this isn't about funding tactics, it's about mindset. Most people hustle for capital like it's a trophy. If I raise $1 million, I've made it. But billionaires don't hustle for capital. They design ecosystems where capital shows up unsolicited. How? They focus on value creation before valuation. They solve bigger problems. They build assets that compound. And they don't panic when it takes time. Because they're not chasing validation. They're setting up inevitability. It's like dating. If you're desperate, people run. If you're grounded, building something meaningful and not chasing, people lean in. Same with capital. It smells insecurity, but it flocks to strength. One founder once said, The best fundraising strategy is to become the kind of founder that investors hope will call them. It sounds smug, sure, but it's a mindset worth adopting. Now, let's bring it all home. If you're trying to fund your vision, stop looking at money as the first move. Start by building something worth funding. Protect your equity. Delay the dilution. Think in assets, not just cash. Engineer systems that attract opportunity, even when you're not asking for it. You don't need to be a billionaire to use the same blueprint. You just need to think like one. Start small. Build a product that works. Use it to create income. Use that income to acquire an asset. Use that asset to secure capital. Stack it slowly. Protect your upside. And most of all, play the long game. Because the longer your runway, the more leverage you'll eventually have. Don't be the person who gives up half their dream just to fund it. Be the one who builds the dream so strategically, capital begs to join you. And there you have it. The hidden strategy billionaires use to fund their empires that nobody talks about. And now you know the game. Not just how it works, but how to start playing it your way. If you found value today, I highly recommend watching my next video. Don't forget to like, share, and subscribe to our channel. Also, feel free to leave your comment below, especially if this video made you think differently. I appreciate your support more than you know. Until next time, stay consistent, stay patient, and stay winning. See you in the next one, Money Magician.